As Alex kindly introduced us, I'm Katherine. This is Forrest. And I just want to say how exciting it is to be presenting at the first in-person event that we've had in a really long time. We actually have only been members less than 2 years. So definitely remember our first time being here and being like, could that be us on stage? And I don't know, it's kind of a full circle moment for us. So it's very exciting. We are based here in Dallas, and the two of us, we've been married 6 years and have 2 children, Finn and Zoe, who was born just less than 4 months ago. So a little bit more about me. I'm from Dallas. My background was in management consulting. So I did strategy work for Deloitte. And Forrest?
I'm Forrest, and I'm one of those California people that you're trying to keep out, apparently.
But then got married to a Texan. So
She brought. Yep, she brought me home.
Yeah.
I did too. My background is a tech entrepreneur, and I've been building tech companies for the last 15, 20 years. And most recently sold my company, and we came out here to Texas, and we're trying to figure out what we're going to do next. And we landed in real estate.
Yeah. So we became PIG members in August of 2019 on the back of some margaritas in Mexico that we talked to a member who oh, there they are. Who introduced us to Lifestyles, and they're here supporting us today, so that's cool, and investors in our first deal. So
wait, so you heard about Lifestyles while being drunk?
Absolutely. Okay. Yes. So we don't listen to the radio. I don't know. That was not how we found out. It was over margaritas in Mexico. Good story behind that, but yeah. So and then we became lead investors a few months after that, 6 or 7 months after that, and kind of went all in. We're passives in 13 deals, and as I mentioned, leads in our first deal.
Okay.
Most recently. So why did we join Lifestyles? We were both working a lot. I don't know if there's any former management consultants here, but the hours are really long. I was traveling every week, and Forrest was like a small business owner, always on call. So we moved to Dallas. We were starting a family, and we're like, something's got to give because we can't keep this up. And so this was a very natural fit. We were interested in real estate. We actually in 2018 bought a very small retail property in Carrollton, which I thought was going to work out really great until the tenants were fussing. And I was like, shoot, I don't know what to do. I literally had no one to call. I was freaking out because we're self-managing that, and it became very apparent that we lacked any mentor, any contact. I had no one to even ask a simple question. So, yeah.
Right, and we spent a lot of time because we knew we wanted to get into real estate, and I think it spent almost a year just kind of reading books, watching YouTube videos, and trying to figure out where to go. And we were just getting so overwhelmed in all the different directions you could go. There's land flipping and storage units, and we just
wholesaling.
Yeah, we were getting really discouraged, and it was really lucky that we found out about Lifestyles, because when we came, the whole model just clicked, and it was a group of people that are transparent and willing to share their experience with you, and it just, I feel like right away we're like, this seems like a path that's going to work. We're going to have people help us, and it just makes sense.
Very structured and easy to follow along, kind of like the roadmap. So, yeah, we had a little nest egg. Forrest exited his company, and so we had a little bit to play with, and didn't necessarily feel comfortable just putting that all in the stock market. And so, yeah, it seemed like a really good fit. We have a more relaxed and balanced lifestyle, and we also, I think, maybe some other people have talked about retiring themselves, and we're trying to retire our parents while also providing a good legacy for our kids. So
okay,
let's talk about our diamond, the Pearl.
Yes, fantastic, beautiful property, and they'll show you the pictures. Go for it.
All right. So the property that we bought back in November is the Pearl on University in Denton. It's a smaller property, only 35 units, built in 1985. We purchased it for 3.57 million. The cash out of pocket was 1.2. Our financing was pretty good.
Whoa. What am I going to ask them, Alex? They just blew 1.2 million. They had that in their back pocket.
Yeah. So hold on. Yeah. Okay. Gotcha. Thank you. So, okay. How many have we had of these in the last year and a half? A little rusty. Bear with me, folks, as I work out the kinks. Okay. So of this 1.2, did they have it in their backyard? Well, they're from California. If you sell an outhouse there, you make $1 million, right?
We never
No.
owned a house in California, which is why we moved here.
Right. So how many investors did you have? Well, first of all, this is a syndication, a group of people getting together, pooling their resources, that $1.2 million to acquire an asset. So it's a syndication. How many investors do you have in your syndication?
We have 25 investors with us.
And so what's the smallest amount one of the investors put in?
I believe it was 25K.
25K. So it's not just, this isn't just you have to come in here and put in 250K to get into one of these deals. What we ask all of our leads is, so for our first time investors, sometimes they're a little weary about whether they should, how much they should put in. It's always a common question I get from new members, right? And so what we ask all the lead investors to do is have a few slots for sophisticated investors that can put in 25K. Now, these syndications can only take so many sophisticated investors, and David's going to go into that. I won't dive deep. It's all right. See him walking back over here, try to rein me in. So that's why you have these members that have put in 25K, right? Okay.
Right. So we raised money from investors to help us make this happen.
I got a question that Alex forgot to ask y'all.
I feel like
How many members do you have in this? You said 24?
25.
25. Are they all right here in Dallas?
No.
Could you explain to people, because the people all across America watching y'all.
I will say we have investors from Hawaii and Alaska, which to me was incredible.
Is
As
that
well
not
as, like,
cool?
New York, Arizona. I mean, I think we had like 7 or 8 states represented out of 25 people.
Okay. So one further question. You just bought this a couple months ago. How many of them 25 investors flew in to look at the property? None. So I want you to understand that. You have to be living there. The guy's out there on the beach in Hawaii investing in this deal, never saw it, but he's making a great rate of return. I just want you to understand that you don't have to live in the state to invest in this deal. And we do deals all across America. We've even done deals in Hawaii, just so you know. I'm just saying, live where you want, invest where it makes sense. I just want you to know everybody can do this. I just want to get that across to them. Okay?
And I will also mention, when we were raising money for this, the interest far exceeded like what we were able to do. So we actually had to cap it a little bit because, I mean,
Had to close it down early just because of the demand to invest in multifamily assets run by absolute pros with a great network around them. Okay, moving on. So high level, I was telling them, listen, you don't have to go in and read every single line item, right? It's not important for you guys to know, 33K in income.
we're so invested in the numbers.
Right, yes, I know, we are as leads. I mean, our NOI is as important to us as our children. So yes, it's that big of a deal. So just high level, go ahead.
So high level, we came into this property, looking at the numbers, and I think we had analyzed 40 properties, toured a handful of those. And
Do they sound like conservative, analytical people? Who likes it they're that way? How many of you consider yourselves, I'm not saying
Nerds.
politically, but conservative fiscally? Yeah, we all are. Do you squeak when you walk? That's a good thing, am I right?
We've had 10 p.m. analytical spreadsheet breakdown phone sessions. Go ahead.
so yeah, we found this property. We were actually on vacation.
Yeah.
And it was kind of scary at first because after running so many numbers, I would get in the habit of just analyzing deals. And when one finally really clicked, it was like, uh-oh, like, here we go.
Go time. Yeah.
You know, and luckily we had our mentors and our broker and everybody there to help us. And we just jumped on it. We were on family vacation at the time, like negotiating the sale of the deal. And everything went pretty quick, but we were surrounded by so many people that knew what they were doing.
Yeah.
And were able to help, and every question has been dealt with before. So
these were the numbers that made us jump.
yeah.
Right. So this is way early on. They've only owned the property for 7 months. So it's just early.
Right.
So you'll see some more of it here in a moment.
Yeah, so upon acquisition, this was a little bit of a hybrid deal. There had already been some work on the property, but still a lot of value added components that we could do. And that's kind of what we were looking for because we didn't want to take on too much for our first, but we also wanted to kind of get our hands dirty. So this just shows a little bit of the exterior. So you can see we added the cedar plank paneling on all of the balconies and made patios. So the reason this was actually kind of our big project because when looking at the different comps, we could demand another $50 to $75 per unit just based on having a patio for each resident where they could have kind of their own private area. So that was a big income generator for us. We did some lipstick stuff. You can see we changed the doors to like this bright blue and
Chinese porcelain blue.
Yep. So
I also use that color. Remember Marty said we steal each other's ideas?
Yep.
Everything I use, all these other members use too. Hardly any of it's original. If
I
it
actually
works,
stole
you use it.
Chinese porcelain from my mom and dad's living room. So that's how we got this color. And so, yeah, you can see not only does it look nice, but it's very functional. And we were able to ask for more income because of those patios. We also added a few more things like a dog park and an outdoor kitchen, benches to add more community feel because it is a smaller property. Next slide.
So real quick, I want to add to this. So you heard her say get a $75 rent bump. So we don't just magically create this. They did a market survey. They visited all the like properties in the area and some that weren't even like, but sometimes you can go to some of these like brand new, really nice properties just to get the creative juices flowing. But we don't use those comps for our numbers. We use like for like. So similar vintage, similar size, make and model, that kind of thing.
I'll also just mention we had talked to different property managers as well as brokers to kind of get that information as well. That wasn't something I naturally knew. Mm-hmm. So here you can see the landscaping is
terrible.
Yeah, that I was like, I could not handle the landscaping. That birds of paradise situation was like attracting, I feel like animals were living in there. I don't know. There's a lot of rubbish you can see that was collecting in the leaves. So that all got torn out. This is actually the exact same unit. It's slightly different angle, but you can see we added the patio, the nice mulch and a bright shade. And also we add some paneling on the side to kind of hide any kind of HVAC or any paneling. We wanted to kind of hide that, and so we added cedar structures there.
This part right here that you'll see, you also hear it referred to as screening. So they'll put it around the HVAC units, the electrical meters, gas risers, things of that nature, and it just gives it a more attractive look.
I think so. We had 6 of the 35 units that we took on were classic units, which means like they look like this. I don't think that those had been touched since 1985. So you can see, white appliances, very dated cabinetry. The floor was sticky and yellow. This is what it looked like after renovation. And we're still going through those units because actually those people enjoy living there. And we're right now, just assessing the situation. But we've changed to all black, a really nice gray color that was part stolen. So
Same color.
and the nice countertops. So it's definitely a much improved
if
look.
you guys look at that, would you like to live there? That's fantastic, right? And what was the budget for that? Do you recall?
For each unit?
No, just for this one.
Yeah. It's about 6K.
6K for the renovation to get and wait till David goes into this whole cap rate thing, which I didn't touch on, and what $1 increased in income does to the valuation of the asset.
And this was the thing we were most excited about, and really kind of bumped the deal in terms of our interest. But if you can see here, there's me in my little yellow mask. This was the laundry room. And so when we walked in, it was very apparent that it was huge, underutilized. They had mail here, and they had like a small bookcase here with like a free library. And so we kind of were like, should we do an office? And we're like, we could do a whole unit here. So this is what we have called Unit 36. We were able to do a 1-bedroom here, and then we moved all the laundry facilities into this maintenance room. So the maintenance room now is here, and this is like the floor, well, it's kind of cut off, but the floor plan of the new unit, which we have pictures but didn't make it into the presentation. So it's
how much value did you add by adding that?
Well, so the rent is $900. With expenses and everything, it's anywhere between $150,000 to $215,000 in terms of value. So it's pretty
How about that?
Substantial.
So, yeah.
And the CapEx to improve that unit was like 35,000.
Yes.
So
to build out that unit. So
this sounds like a pretty good idea.
It was a genius idea. Anytime you have these opportunities to add a unit where you have this underutilized or non-utilized space, we see it all the time.
the offices.
Yeah, the offices for sure. And they just have this, it's just wasted, right? It's just, they're air conditioning it. There was no AC in this area. But so just how they were able to take an old maintenance room, turn it into a laundry room, and the back half of the laundry room is actually an enclosed maintenance area, and then turn the old laundry room to a unit for somebody to live in, and it looks beautiful. There you go.
All right, so the cash flow came in, once we did our analysis for year one, we're looking at a 7.72 cash on cash return. So that's pretty exciting. Year three, we're looking at 10%. I don't know if we want to talk through all the numbers, but have a look. Everything looked good. This is right out of our analysis, and we're on par with this right now.
Right. Yeah. This is not bad at all for a 36 unit. Not at all. We're not going to get too deep into the numbers. I know some of you will nod off, especially some of our millennials in the group. We don't want to do that. Yeah, but this is really cool, and this part's really important. Just going into the NOI a little bit and how it, looking at that property value, and as that NOI increases, how it increases the valuation of the asset.
Right. So you can see in year one, we're looking at. Let me get a little closer.
Yeah.
To the screen here.
Yeah.
So our property value going into year one is already at 4.2 million, and we bought the property at 3.57, and we actually had a pretty good negotiation round. So we brought the cost of the property down too, just on up.
He's very good at negotiations.
I don't know about that, but this is my negotiator right here. So
You didn't come from California here, so.
Exactly my point. It's hot here. And there's some mosquitoes. So you can see the progression, on our model. Year two, we're looking at 4.5 million, and in year three, we're going to be up to a property value of 4.8. And with the cash on cash, if you look in the bottom right-hand corner there, actually look on the very bottom line in green, our total return is going to be 1.6 million in equity gain. So that's in 3 years, that's 131% over the original investment. So this is looking really good.
Did you hear how excited they got with the 100% return? This is how conservative people are. Made 131%. Who would be pretty darn excited with 100% return? You know, when my speech was at the beginning, I said we make about an 8% return, and then 2 to 3 years later, what do? We double our money. Give them a hand. That is huge.
So how are we going to get to that 131%? I think we came in, as everyone noted, we acquired this property in November, still the height of a lot of stuff going on with COVID. And, obviously, I think our residents were impacted by that. So coming in, the first thing we did was kind of see what we could do to help everyone out with rent when necessary. So kind of on a case-by-case basis and making sure they're connected to the right resources, and worked really hard for that. We also, in looking at our competition in Denton, almost every property that we looked at in our comp set had RUBS. I don't know if you got water, pests, trash.
Don't worry, guys. I'll explain what rubs are. They hired massage therapists. Everybody gets a back rub. They're really happy.
It's all good. Anyway, basically charging back for different utilities and services. We also did a very modest rent increase. We wanted to balance kind of what the current climate is with also just trying to push just a little bit. And then creating new income streams, the biggest one being our new unit, but we also went through and found a bunch of pets that weren't on the lease. The previous owner hadn't been doing late charges, and then we changed some of the deposit structure. So it was an interesting learning experience, and I'm glad that the world is getting a little bit more back to normal. It helps our situation a lot. What?
Yes, different levels of normal.
Yes.
Really quick question for y'all, because you're doing all this work. You guys are running this deal. You're handling everything. You're implementing all this projects. Those 30 people invest in your deal. Can you explain to new people out there, how much work were they involved in this deal? What did they do? Explain what they do as a past investor.
I will say one of our investors gave us a lead on a muralist, because we were trying to add a mural on the building. So I appreciate that. But other than that, not much.
Yeah, they just have to read the updates that we send them.
I don't know if they do. I like every time I get so excited because we're new, and I'm like, okay, here I'm gonna put in this funny little pun or whatever in all the communication. Then people are living their life, so they're not doing much.
She sends out 30-some emails to her investors, and she gets back one email.
Yes,
like, but I wrote this 4-page document.
I know.
So
it does feel that way.
So one thing to know, as leads and syndicators, what we do is we send out a monthly update on the property, on the investor members' property, with financials, things like rent rolls, T12s, delinquencies, if there are any, balance sheets, just a host of generally 7+ reports so that you can see what's going on with the property.
Yeah, we work hard on those reports.
So read them, but no one does. All right, next one, Catherine.
So how has it changed our life? Well, we are a, husband-wife team. So it's really fun to be pursuing this kind of new chapter, this new career together. I think we've both gotten a lot more confident in kind of our real estate knowledge, and being able, after a lot of training, and I would say especially mentorship, being like having the confidence to take this on. It's hard to believe, like, we've been here less than 2 years, and a year and a bit of that has been during COVID. So, I mean, it feels kind of like it's happened very quickly for us. So we've been able to build our wealth. We get mailbox money from our passive investments. We just open the mailbox and we're like, ooh, money. That happens every quarter. And I get excited. I'm an excited person though, so maybe you haven't noticed. And by this picture, I feel I should mention that we bought this property during my third trimester, and so that was also kind of a cool thing to be doing that while also, balancing that family aspect. Lots and lots of family time, good or bad, I'm not sure. Leave it to yourself. COVID definitely exacerbated that, and really living the abundance mentality. So I don't know if you've spoken on that, but that was really important for us, is like a family, and our values is this idea of there's room for everyone at the table, and really we can all kind of amplify what we're doing. So
Here's another aspect I want to bring up to y'all. Now, you bought this in Denton,
yes.
but is there not other members that bought apartments in Denton?
Yes, thank goodness for them. And
So I want you to see the power of this, guys. If this guy owns an Exxon station here, and this guy owns a Sunoco station over there, do they share all the numbers? But could you reach out to these other lead investors that are in the area?
we did a lot.
So I just share a little quick glimpse of that, because I want them to understand the power of the lifestyle community.
I mean, I was trying to think of all the people that we reached out before this deal. I mean, without getting into too much detail, there had been diligence done on this building prior with another member, Kim, who helped us out tremendously. Rick, who owned property in Denton. We talked to different people about management companies, about different vendors. I mean, I feel like we must have had conversations with at least a dozen members at some point before acquiring this building. And we still do, because there's a lot of people that know, like, what's going on with Denton? What's going on with, like, this stuff with the government or the city council or whatever it is. I mean, I think we're still doing that. I feel like I already had a discussion just previous to this about, situation in Denton. So that's very helpful.
Hold on. You got to have a microphone. They don't know what you're saying. I know what you're saying because you're talking in my ear here. Hold on, I got to get this down here. Okay.
So just a quick comment from one of your passive members that came across. They want you to know they do read your updates.
They're out there in the virtual world. They're not here.
Yeah.
They're too lazy to come see you in person.
Is that Ganito?
Thank you, Hawaii.
Okay.
Van,
What's that?
Van.
Okay. Very, very good. Oh, it's good to know.
Somebody reads it, see?
Yes.
I will say our investor from Hawaii is funny, because he'll call and he's like, hey, how are things going? And I'm like, yeah, someone cares. I'm like happy to talk to you about what's going on with all our residents, like getting into the details a little bit. So you want to talk about goals?
All right. So our goals going forward is we're pretty close with finishing our CapEx and getting this property stabilized, and it's going to be time to start looking for another one. So hopefully by the end of the year, we'll have another one under our belts. And then also we're really excited about Expo coming up. I'm sure you guys have heard about that. So we'll be there.
It's right here.
Yeah.
Yeah, across the street.
Makes a nice short drive for us.
Yeah.
Our long-term goals is to continue to acquire properties and just kind of build up our cash flow. Like Katherine said, we have a little bit of a nest egg, but we don't have any cash flow now because none of us have an actual job now. So we need to continue to build up cash flow, hopefully to the point where we never have to traditionally work again, and we can just, dictate how we're going to live our lives. We'd love to get out of Texas for the summer for a couple of months every year.
Escape the mosquitoes and heat.
Go somewhere. Santorini, I hear, is nice.
Santorini is nice.
And we also, it's really important to us to be able to kind of give back and donate to the different causes that are important to us. And really, just have the cash flow and, choose how long we want to work and just spend time with our family.
Yeah.
That's really our long-term goals.
Which I put, like, enjoying a balanced life, like beside our kids, not just like for them. And so I have gratuitous photos of our children in their pajamas because we get to tuck them in every night, which would not have been possible with my previous career. So
Do they have any clothes that aren't in stripes? Just
yeah, no, well, I was trying to coordinate, of course.
Mom life.
Seriously. And so our team, we keep talking about the team, and it is so true. We could not have done it without these people. Alex, of course, his wife Sharon, who also helped us on a lot of matters. Mia was here. There we go. I just, those as part of the lifestyles team have been so instrumental, along with all the other members who have just helped us along the way. Carolyn with Lifestyles Realty was our broker. She did not make me feel stupid for all the questions that we asked during acquisition. So I appreciate that. We appreciate that. And then Ricardo with Old Capital. I don't think he's okay. Well,
Paul's here.
okay. Well, he was also very helpful. He had so much knowledge about the deal, the seller. He knew like a lot about the property above and beyond kind of his role as like the money guy. So he got us the Freddie Mac loan and everything, and was obviously a big part of this acquisition. And then Dax, who's with Heritage, did our due diligence. So came through. We had like 2 days to go through the building and look at every single unit, and so he coordinated all that for us. So yeah, it was great.
Guys, ready for some questions?
Yeah.
All right, let's take a couple in the room first, then we'll go online as well, okay?
Okay.
So you have a question for us, Leo?
Y'all bought this 35 units originally. What was the cap rate? Do you remember when you bought that?
When we bought
He
it,
said, what was the cap rate when you first evaluated?
Yeah, I think that the cap rate when
Oh, by the way, all the people, that's the most nerd question in the world. So,
yeah,
but for the nerds who, I will explain that this weekend what that means, but you don't have to worry about that if you're new. Okay.
so the purchase cap rate was 6%. So, and most of our predictions were at 5.5, and now things have even compressed further. So now we're looking at 5. So it's great.
Non-nerd question, hopefully.
Oh, right. How long did it take to get to raise the money, to raise the capital?
like 48 hours.
So within 2 days, they had enough investors to do this. There's a question way back there. Way back there. You want me to get, I'll get Tom first, then I'll get you, okay?
What is your plan for this property? You refi it in a couple of years and sell it in 5, or do you have that plan down?
Yeah, the plan, we're hoping to do a refi in 3 to 5 years, and we might potentially hold this for 5 to 10 years. So it's kind of a long-term play, and we'll just kind of see how things are going. But hopefully we'll get most of the money back to investors, and then with the cash on cash, it's just, we're just printing money for everybody.
Okay, I'm gonna take people from out of the area. Let's see what we have.
Okay, so we've got a question from Facebook from Kemlesh, and they were asking, how many passive deals did you guys do before doing a self deal?
I think it was on the first slide, and I think we're in
Well, no,
4.
we've done we've total are in 13. We did a lot of passive deals in the first 3 months we joined. And then we kind of took a break because we're like, we're going to need our own money to do this deal
Yeah,
that
guys.
we were working on.
And I want to touch on this a little bit because that's the biggest fear of new people is, can I get in a deal? And you did how many in 3 months?
Oh, I think I don't know.
7 or 8.
So they did 7 or 8, and I'm just saying
It was a lot.
a lot. Let's
It's
say
all-
6. I don't
We
care.
were
Just-
excited.
Within 3 months, they did 6. So there's a lot of deals.
Yeah.
What you're going to find is what they almost did, and I'm glad they did it. You will tie up all your money. And if you want to be a lead down the road, don't tie up all your money. You understand? Because they want to buy their own now. So if they would have kept, they could have deployed all their money, but that would have slowed them down from being the lead later.
And we did smaller amounts. We wanted like our hands in multiple eggs in the basket was kind of our strategy in the beginning. We wanted to see
So you put like 25, 50, 75 little
I
chunks?
don't even think we did 75 in the beginning. It was just all little chunks to be able to kind of
And were they all
see-
here in Dallas?
No,
All over the place? I'm just,
all over, yeah.
I just want people to, because sometimes people are thinking of passive, you know, whether you invest with whoever, I want them to know, no, you went past the route, say, doesn't look like that's that hard. Let's put a deal together. Let's make a career out of this.
Yeah, I think
Okay.
we have only one out of state of
Okay.
Texas, but, or no, probably two.
Was that California?
No.
I mean, he loves California so much. I just don't know if he invested
He
there.
loves the cool weather and no mosquitoes.
You know what?
So Nina was asking, how were you guys able to invest in a syndication?
Yeah, how are you able to do this? And that's something I really covered in the seminar, how to do this stuff. There's some SEC laws and stuff that you really got to come to the seminar so I can break that all down, how you can get involved in these type of opportunities. You like that answer, Alex?
Perfect.
Figure that.
I wouldn't have done that good. I would have been, I'm in Leo's camp. I nerded out a little bit.
Yeah, I know.
Yeah,
I got to pull you back.
yeah.
Yeah, okay, hold on.
All right. So Ken is asking if you manage your own property and what the occupancy rate was originally and how long it took you to get it up to 90%.
Because we just had a baby, and because of our conditions of our loan,
Lender requirements.
yeah. So we did a Freddie loan, so we had to, as first timers, we had to do third party management.
Yeah, I want to add to that. Within Lifestyles, we like and highly encourage leads to manage their own assets. We've found that when a lead manages his or her asset for the partnership, they tend to perform better. But it's not always the case. It's not a perfect world. And sometimes, as in when you're in a freaking pandemic, Freddie Mac and Fannie Mae will strongly encourage you and or require new operators to have professional experience property management. So,
And that might be a requirement of a year, year and a half, and they can reevaluate.
Yeah.
It's a
So,
year.
so
Yeah.
That's
it's
when you
just,
know that.
they want to get through it, and yes, they want to self-manage. So they're at the point where, hey, let's get through this and let's reevaluate. Am I right, Paul?
There you go. Now follow up, Catherine. You said, how full was it when you bought it?
Yeah, so I think it was interesting because the occupancy dipped right before we purchased it. And I think it was down to 82 or 84%. And then we were able.
But it was still pretty full. It wasn't like there was 50% full or something like that. It was
no,
a bunch of people in there.
Yes. It was pretty stable. And then we were able to bring occupancy up really quickly after that. And then we went through repositioning the asset a little bit and getting the right tenants, residents that we wanted there. So.
And just so you know, typically when we buy an apartment, occupancy will dip right away. Why? The bad eggs move out. They don't like the new sheriff in town. You're fixing everything up. All of a sudden you have to pay late fees they didn't have to pay before. You know, they might even have to pay rent they didn't have to pay before. So these things happen. So
Hey,
you're going to dip a
we're
little bit.
so strong in our operations.
Yeah.
The dogs and cats have to pay rent.
Yeah.
You got a gerbil, $20. A snake, $20. 2 cats, that's $40 a month.
We love pets. Why do we love pets? We can charge more money. You know what we hate? Children. Can't charge more.
Yeah. Until they hit 18, credit check, $55.
You have another question?
Actually, a couple questions about the kitchen. So Cindy from Facebook was asking if you replaced the cabinets or refreshed them. And then Maggie was asking what the color of the new paint was in the kitchen.
Refreshed. And what's the color of the paint in the cabinets?
Blue.
No, the gray color.
I have no idea.
Oh, okay. Well, it was whatever Lifestyles told us to paint.
Watch this.
It literally, I couldn't even tell you. It was
It's
like,
Who knows
and
the
gray
paint
scale.
color of my properties? What is it? Stone Mason gray. See, a good mentor would know his colors.
I know the door color.
but do you recognize, is that what we have? Stone
No, you
Mason
don't-
gray?
No, you're gray.
He uses like repost gray or
It's gray
neutral
scale.
gray.
Gray screen, gray scale.
I know.
Yeah.
We're just from
The blue is freaking blue.
I mean,
There you
Yeah,
go.
you guys all use
gray.
the same.
Sure,
Just
they're
so you know,
really
the
good.
Dallas contingent,
So,
these guys all use the
so
same
let
gray.
me talk about the network. I have a paint guy. I call the paint guy.
Yeah.
Hey, Brian, I need paint for my cabinets. Okay, Alex, we'll get that blue paint right out to you. I don't need to know it. I got a guy.
Yeah, just so you know, Alex is brilliant. This guy knocked out a park. He's invested in so many deals right now. He's way ahead of me now. He bought like How many deals did you invest in so far this year? Like 4 so
One
far?
every single month.
One every single month. Pissing me off. You know, he's better than me. Anything else? We're good.
Yeah, one more. Philip was asking how much you guys have personally invested into your own deal.
Great question. So how much skin in the game did you all put in?
We put in 10% of the down, and I think it was
15.
15. It's your first
15.
deal.
Oh, 15, sorry.
We know what you put in.
Yeah, I think not remembering the exact figure, it's
Who understands where that comes from? It's called the white paper. It's what we do to protect you guys. So a first-time lead has to put in 15% of the capital raise to do that. So,
like 150, I think,
Yeah.
160.
so maybe they might have put in a passive deal, 25K, but who likes that we make them put a biggest chunk in there? Yeah, it should be
Yeah.
that way.
Well, we
Right.
wanted to put a big chunk because we really believed in the
And you
deal.
believe in yourself.
Yeah.
Yeah, absolutely. Yeah, you know, what's funny is you know, as we do more deals, we can put less and less in deals. But guys like me, I put in the most out of all my investors every time. Why? Because I believe in me. Who likes that? That's what we do, you know?
We like that.
Great question. All right, somebody, you had a question? No? Anybody else?
Yeah,
Somebody up front.
Ken, right here. Yeah.
COVID reserve,
Gotta say.
COVID reserves, did you have to have, because of your loan, did you have to have?
Yeah, I think it was 156,000 was a 1-year hold on that. And I know the agencies,
You'll get that back.
they're starting to release that, and so we're probably going to get that back.
Yeah, a lot of
before
these
it's over.
requirements. So I want you guys, this is why we have classes, live classes all the time, is because lender requirements change all the time. I have people telling me stuff that's not true 6 months from now. You understand? So updated things, relaxing rules on some things, more strict on other things, green programs. There's lots of different ways of doing things. That's why we have live events all the time. So you guys can keep educated on what the market is and how we do lending requirements.
Yeah, and just to capitalize on the live events, like, you know, a road trip, which we'll have next week, we'll have vendors come up and a finance vendor, for instance, like Old Capital.
Mhm.
And what they'll do is they'll talk about what the current state of the market is, what's Fannie doing, Freddie doing, bridge loans, or bank loans, things of that nature. And then they'll say, who's got a question?
Yep.
And then those who have been in deals or are just grasping the knowledge will say, hey, what's going on with COVID reserves? Do they still require them? Well, Freddie may, Fannie may not. This bank doesn't, this bank does. And so they'll break it out to you. And again, it's just the strength of the team.
And I know a lot because I have probably 100 preferred members in the room. They're asking very nerdy questions for the new people. And, you know, you don't know what agency debt means or what CBRE or what all these different acronyms and words we use. We're going to break it down really simple this weekend so you'll all understand. Who likes it? We're going to do it that way. We'll keep it simple, okay? So, but yes, I even taught him how to do it. Retired him in 2.5 years. Oh, there's another Aggie. She was in my front room, Supriya. Yeah, she was a national winner too. Awesome. All right. Did we have a lot of fun tonight?
Yay.
Who's coming to seminars weekend?
I'll be here.
Any final words of advice, you two, to folks out there, first time watching or in the room?
I would just say take the plunge because we kept waiting till we were 100% ready and you just never 100% ready. I mean, we felt very confident because we had a support team. We're like, are we doing this? And Alex is like, you are. I was like, are we doing
That's
this?
right.
Yes, you are. And so, yeah, we did.